Hi, my name is Paul Bashir. I'm the CEO of Harrison Street in Europe. Harrison Street is a global investment management firm focused solely on alternative real assets. Yeah, we're very excited about the opportunities within the core space in Europe, specifically in the alternative space. And that's really down to really two fundamentals. One is the repricing that we've seen in the market, which really, depending on which sector and which market, we've seen repricing anywhere between 25 and 35, even upwards of 35% in some markets. And that repricing over the course of the past 24 months has been coupled with a very attractive operational environment where we've seen record levels of occupancy and very attractive rent growth. That rent growth is really predominantly driven by, an outpaced demand, really provided through, really a lack of supply. So when we combine that very attractive demand supply dynamic with that repricing, we're very excited about some of those core opportunities that we're seeing right now. Yeah, there's no doubt it's certainly been a bit of a rough ride in the real estate markets in Europe over the course of the past couple of years, not least dealing with all of the geopolitical fallout and the most recent economic turnout, but also dealing with some of those just in continuing uncertainties that have been hampering the market. And I think, sitting here in January 2025, I can't help but feel a little bit more optimistic than maybe, the same time last year. I think we've seen rates obviously starting to come down. I think, we're obviously seeing a bit more stickiness on those rate environments in the UK. And I think we'd expect to see probably a bit more of a conservative approach to some of those rate declines that we're anticipating in 25 in the UK. But certainly in Europe, with a very much more, positive inflation environment and a much more, optimistic and aggressive look market sentiment towards some of those, rate declines that are anticipated in 2025. I'm pretty excited. I think that arbitrage between UK and Europe is going to be one that is going to present some really interesting investment opportunities. Coupling that with some of the sectors that alternative investors are, focused in, particularly in the living spec sectors across Europe, where we see, chronically underprovided markets. I think coupling that supply demand with that repricing, with that arbitrage opportunity between UK and Europe, I think you're going to see some, really attractive investment opportunities in the short to medium term. Our high conviction sectors really center around the living sectors, specifically, purpose-built student accommodation, residential for rent, which covers both BTR and single family rental, and also sort of senior housing. And senior housing for us really is more the low acuity end of the spectrum, and specifically in that rental market, which we think is a highly underdeveloped but highly attractive sub-market of that senior space, which is very underprovided for in Europe. I think those are the sectors where we see the most compelling supply demand imbalances. And I think specifically when looking across both UK and Europe, you can start to see some very attractive submarkets where opportunities really exist to buy not only, potential assets to develop, but also some very attractive, income producing assets with very attractive upsides, where, they're operating in unregulated environments, but where we can, underwrite quite attractive rent growth over the short to medium term. We are focused a lot on affordability, and I think there are pockets of the markets that we're starting to see some of those, that rent growth that we've seen over the course of the past 2 to 3 years start to hit a bit of a ceiling. And I think, again, as an institutional investor, that's one area that we've got very much one eye on with respect to, choosing markets where we can underwrite, good levels of rent growth in an unregulated environment where we can still effectively underwrite a very affordable rent. the most attractive alternative sectors for us at the moment really fall into kind of two categories. It's really self-storage, which is a sector that we've been very focused on in the US and one that we've had our eye on in Europe here now for, over 5 years, but we've just been finding the right execution plan. And I think, the market is really just starting to really emerge now. So that's a sector that we really like, very underprovided, very different to the US, but we do think it's got a lot of growth and a lot of opportunity to establish itself as a much more institutionalized asset class here in Europe. So that's one that we're very focused on. And as I mentioned earlier, I think, subsets of the senior space, which are not yet fully provided for, and specifically in the rental market. So when we look at more assisted living type housing, where again, lower end of the acuity scale, but ones that are providing for very much underprovided rental stock within, but geared towards the over 65 communities.